Back. SpiceJet is down about 8% or so. The reported numbers, and let's just talk about the numbers. 14 odd rupees is where the stock is trading at right now. So there's the numbers, and there's also, I guess, auditor comments as part of the results, which I think the market is taking note of. We've got Sanjiv Kapoor, COO at the company, joining us on a phone line from Gurgaon. Mr. Kapoor, good morning. Prashant here. I'm sure you've gotten sort of asked this question. The auditor making some comments. Company's total liabilities exceed its total assets. These conditions indicate the existence of material uncertainty that may cast significant doubts about the company's ability to continue as a going concern. How do you interpret this? How do you read this? I mean, what kind of discussion have you had with the auditors before they put this on record?
The first thing, this comment has been in the quarterly results for the last 11 or 12 quarters now. So it's not a new observation. It's a technical observation. When your liabilities exceed your assets, that observation is required to be made. So it's not new, and it's a technical observation. What it simply says is that, aside from operational performance, we need to get more funding or recapitalize the company. And that's a well-known fact to everyone. We've obviously been aware of that. We're working on that, and when we have, something to announce in terms of recapitalization, we'll make that announcement. But it's not a new observation, and it's a technical observation.
What are the total liabilities of SpiceJet?
See, I'm in a car right now. I don't have the complete numbers with me off the top of my head, but the liabilities do exceed the assets, and again, we are working on that. It's not a reflection at all on our operating performance and on the significant improvement that we've shown year over year in the last quarter.
Right. No, absolutely. I'm coming to that. I was just pressing on that because, I actually have discussed this with the management earlier as well, the SpiceJet management earlier as well. But you said that you have plans to deal with it. Could you highlight? What route are you taking to deal with this? How are you raising funds? What is the plan? Will promoters put in more money?
There are two possible ways to raise funds. One is through equity, one is through debt. And on the equity route, you can have through a financial investment or a strategic. So let me just put it this way. We, all options are open and available, and we will make further comment at the appropriate time.
Right. Okay, so that's an issue of liabilities and how you're tackling that. Let's just talk about the operational performance. There's a loss, but the loss is lesser than what it was the last quarter. It's actually halved, same period last year. Can you talk to us about that? I mean, what led to this? What kind of dynamics are you seeing in the marketplace? Competition certainly has gone up. What were the load factors in the quarter? What kind of pricing did you see?
Right. So, the performance last quarter, year over year, was actually remarkable. The almost 50% reduction on a bottom line basis in losses, and almost 60% if you exclude extraordinary costs. You don't often see that, happening year over year. And it's driven purely by operational performance. There was no financing activities such as selling and leasing engines or aircraft, etc., to boost our revenues. It was pure operational performance improvement. We saw revenues grow by 15%. We saw costs come down by 2%. We saw unit revenues grow by 12%. Unit costs come down by 7%. We saw our capacity up by 7%. It's actually phenomenal, to see these kinds of numbers on a year-over-year basis. And again, it's pure operational performance. There's no financing activities there to give the numbers a boost. And we attribute this to a couple of things. One is that we've actually very strongly and in a very visible manner said that we don't want to fly empty seats around. So if there's seats that we believe are going to be empty, we will sell them at something above marginal cost to make sure we get some incremental revenue. The second thing we've done is we've relentlessly gone after costs. And it's still a work in progress, but the results are already starting to be visible. But when you see a 19% margin improvement in terms of unit revenue, RASK minus unit cost, CASK, I don't think if you look at too many airlines around the world, you see those kinds of numbers on a year-over-year basis.
So you're saying essentially you're not, you will, the first point was you let seats go empty rather than make losses on them, right? That's essentially what you're doing.
No, it's the opposite. We refuse to fly empty seats around because an empty seat, once the aircraft takes off, is lost forever. So we will sell the empty seat in advance, not at the last minute, at a discounted rate, but as long as the rate covers the marginal cost of, putting someone on the seat, we will sell that seat. So that is what our philosophy has been, which is don't fly empty seats. Our load factor went up by 19% year over year. Last year, load factor was something like 64% for the quarter. This year, it was 81%. It's phenomenal for that, for the low season.
What was the load factor this quarter? Sorry, I missed that.
On average, it was 81%, which is an unheard of number for the low season. So we have completely rewritten the book in terms of, filling the planes in low season. It has never been seen before, these kinds of high load factors.
Right. And could you tell us what kind of pricing did you see this quarter relative to, say, the previous quarter and the quarter before, average?
Right. So our load factor went up by 19%. Our yield, which is our revenue per mile, declined by about 8%. But the difference, but when you multiply the load factor improvement with the yield, you get your unit revenue improvement, which improved by 12%. So what I'm saying is, rather than say I'm not going to sell this seat at a discount, we're selling that seat and getting incremental revenue. We're selling it at a discount, but we are adding to the total revenue generated by the flight. Now, this concept is not understood by most analysts who keep harping about yield. Yield is just one input. The other input is load. When you multiply the two, you get unit revenue, and the unit revenue has gone up by 12%, which is phenomenal. You don't see this kind of unit revenue improvement year over year in most places in the world.
But I get what you're saying, and it's led to an improvement. But why are you? You could have done this earlier as well. Are you doing this now because you're not seeing an improvement otherwise? I mean, you have to do this.
Well,
that's the other way
started doing this in January this year. We are a part of a new management team substantially. Most of the senior management of this team has joined, late last year or in the first half of this year. And this is just new strategy and business model or revenue management philosophy that we've been following. We've taken a lot of criticism for it because people in India were not used to seeing this kind of revenue management. But the proof of the pudding is in the eating. You're seeing the revenue performance shoot up. And that is, and now we can sit back and say, we told you. This is not mindless discounting. There's a method to this madness. And this is improving revenues, it's improving total revenue, unit revenue, all kinds of revenue. And it is good for the bottom line. That is what is helping us reduce losses in low season.
Mr. Kapoor, to a lay person, it appears that if you have 100 seats and 60 people are flying, and instead of that 80 people fly, your total costs are actually, additional cost is zero, right? Except for probably the cost of printing a ticket. Is there any additional cost?
Well, there is a cost of carry for every additional passenger, the fuel burn and the handling cost, but it isn't a large number. It is, on an incremental basis, because the aircraft is anyway going to fly. It's a small number. So as long as you get a revenue which is higher than the small number, for those seats that would otherwise go empty, and you manage to make sure that you don't cannibalize the seats that would anyway sell, so you have to segment the passengers, right? Then it's incremental, it's gravy. It's incremental to your bottom line, incremental to your top line, and that's the way low-cost airlines around the world manage their revenue and their inventory. So it was absent in India in the sense that we followed a more static pricing model, but we have now, simply adopted what is best practice elsewhere in the world and dynamic pricing, and that is why we're seeing this kind of revenue improvements.
So you said that you had a load factor of about 81%, which I'm assuming if there are 100 seats, 81 on an average were occupied in every flight. Which sectors had the highest?
Again, I don't have the data off the top of sitting in my car, but it's low season yet to have an average of 81%. In September, we hit 88%. Means that every day out of the 340 flights we're flying, maybe one-third are going with no seat empty at all.
No, I'm sure I don't want the exact numbers, but would, let's say, a Delhi-Mumbai sector be close to 100%, close to 90%?
I don't want to, that's competitively sensitive.
No, I'm asking that question specifically because, some other airlines historically across the world, when they followed this kind of pricing model where volumes rather than per seat price or per seat yield is what you're targeting, then they also reconfigure their airlines. Are you going to be doing that on any specific sectors at all?
Well, we reconfigured most of our Boeing aircraft. Actually, we've taken out 3 seats so that we put in extra legroom in the first 5 rows.
Okay.
The remaining rows remain the same as before. This is a new product called Spice Max, and that is actually helping us attract more high yield or high fare customers. See, essentially, our business model is simple. We want to build our loads, or make sure we fill the seats that would otherwise go empty early, advance purchase. 30 days out, 60, 90 days out sales. But we want to improve our yields, which is the average, which is the fare in the last 7 to 10 days before travel, because that is when you have the least price-sensitive customer, the corporates and others. And that's the way, airline pricing in general terms is done around the world for low-cost airlines.
So, Mr. Kapoor, would it be fair to say that, strictly speaking, on an annual basis, then the load factors are not comparable if the number of seats have gone down?
The number of seats have barely gone down. Our capacity actually went up year over year. I mean, look at our press release. Our capacity went up by 7% in the quarter.
All right, capacity actually went up. And some of your competitors are actually buying more planes, leasing more planes. Does SpiceJet, is one of the strategies to expand rather than contract?
Well, in the near term, we are going to actually restructure our fleet and get rid of aircraft. We don't want, aircraft which are non-standard configuration or which are beyond a certain age, and then refresh our fleet. So in the near term, the next 9 months or so, we don't see our fleet expanding much. We see it stabilizing at around 35 Boeings by the end of this year. And but we have about 50 aircraft on order as well. So, so after next summer, we should start expanding again.
So we can expect in the next 9 months a little bit of extra capex?
No, well, we've already placed those orders. The aircraft will start coming in middle of next year, and some of it will be used to replace existing aircraft. Some will be for growth. So, but for the next
refurbishing itself, how is it booked, Mr. Kapoor?
Sorry?
When you refurbish, when you change the way in which the seats are aligned, then how do you put it? Is it on your P&L as a cost, or is it does it go as a capital expense?
Well, if you're buying capital equipment, like if you're buying new seats and new products like that, then it's capitalized. But relaying the seats layout to take out 3 seats and give more legroom, that is done in 6 hours overnight by our own engineers. There's hardly any cost to that.
Okay. So your strategy is essentially going to be that even if the incremental return on these seats is going to be low, you're essentially going to be trying to increase your volumes as much as possible. So this is the kind of breakthrough strategy that you're looking at, right?
The strategy is that if we were going to sell 60 seats at 5,000 rupees each, we still want to sell those 60 at 5,000. But we have 40 more seats left to sell. If you can sell 30 of those 40 for 500 rupees, we will sell it for 500 rupees, as long as that is more than the cost of providing the service to that passenger.
And just one final question, from what you're seeing in terms of demand, do you think that if you actually increased prices, you would have demand, or would it disappear suddenly?
See, pricing in the airline business is not flat. It's not as simple as I'll increase or decrease. You have to segment your customer. You have to vary your pricing based on when the ticket is booked, what flight, what time of day, what day of week, etc. But having said that, India is one of the most price-sensitive markets when it comes to aviation travel, and we've seen consistently that if you do a blunt raising of prices across the board, demand falls.
Okay.
So this is a market where demand stimulation is very important. Otherwise, it can hurt you if you just blindly raise prices.
Do you see an increase in commercial activity at all overall, in terms of the fact that are you seeing more business buyers coming in right now?
Well, honestly speaking, there has been some improvement, but not as much as we would like. And it's not only for the airlines. I mean, I think in the month of October, you've seen that car manufacturers reported a decline of sales year over year. So I don't think the full impact of the new government and the new policies, the full benefit of that is being felt yet. We hope it'll become visible more, as we go forward. But in the meantime, we're not going to just sit back and do nothing about it. We're stimulating the market and doing what we need to do to fill our seats.
All right, Mr. Kapoor, thanks so much for joining us on the show.